G'day DeFi family, Bruce here with another video. I've got something different for you today, a new series called a DeFi Solution that I'm working on. Hopefully it'll be interesting for you guys. Something that I find really fun to research and work on. So what I'm going to do is I'm going to review various traditional finance business models and take a look at how the blockchain, crypto, and more specifically DeFi can improve on and provide a much more robust, efficient, and just as important, fair business model from business owners through to customers. I hope to do a number of these videos over time in this series called a DeFi Solution. Now these reviews are just my own personal speculations, so don't take them literally, but in saying that I do hope that these kinds of videos can spark people's imaginations on how we can evolve from traditional finance models to applications and smart contracts of non-custodial nature that benefit all people. Too often we find in traditional finance the balance of revenue is to the detriment of customers and the benefit of businesses. Fair enough, as businesses are the ones shouldering the risks of their trade after all. But it's all too common to see the imbalance once a business gains traction and no longer needs to pass on potential money savings benefits for customers, and gradually valuations grow into the millions or even billions, which traditionally are never passed on to the customers in the form of lower prices or money saving benefits of any kind. Usually quite the opposite. Like, I get it, it's simply economy 101, but don't you think it's time for the world to move on from our traditional greedy ways and find a more balanced method of managing our economy? I'm sure the environment and the nations of people starving around the world would be happy to see things change, as two important examples. Anyway, I digress. For my first inaugural review of a traditional business model and how a blockchain-based smart contract DeFi solution could be more beneficial, I'm looking at Airbnb. So what is Airbnb? Airbnb capitalized on a market that relies on the community, a common application for business models that works now among many industries due to the increased reach of the internet through smartphone applications. Essentially, Airbnb provides a solution for the hotel market that was once the cornerstone of holiday accommodation. Much like taxis were to transportation, but now we have the likes of Uber, and in the East we have Grab for ride-sharing applications. Airbnb provides a platform that allows homeowners to list their properties for short-term rentals for holiday goers or groups of people requiring larger spaces not provided by many hotels. Over the years, it has grown into a multi-billion-dollar business and turned over $8 billion in 2022 alone. So essentially, you have the homeowner and travelers coming together, mediated by the Airbnb business model, providing services and convenience not usually provided by hotels. Airbnb then applies fees for utilizing their platform, which is where the bulk of the revenue comes from. So what are the problems associated with the Airbnb model today, and how can DeFi solve these problems? For the most part, it is a fee structure that is the issue for homeowners and travelers booking accommodation. Airbnb takes 70% of any completed transaction, that is 3% of the renting fee from the property holder, and additionally adding 14% rental fee for the customer making the booking. Now, I'm sure that there is a certain amount of fees required to keep Airbnb afloat, and the local regulator's happy, but at 17% it seems a bit overkill. Perhaps it is due to Airbnb dominating the market, but usually this opens the door for other solutions to spring to life. Much like how Airbnb provided a solution for the short-term holiday rental market that hotels couldn't provide at the time, someone else will also provide a solution or competition to Airbnb to front-run their high fees and rental prices. For example, if a homeowner rents an Airbnb for a total of $400, then the property owner will receive $388 minus that 3% out of that $400. And the renter will end up paying $456 plus 14%, giving Airbnb a whopping 17% or $68 of that transaction alone. That is just a basic rental business model. In the advent of cancellations by property owners and or renters, there is also fines and refund reductions, which would also end up in the pocket of Airbnb. If we take the revenue from Airbnb in 2022, according to my research, it was somewhere in the $8 billion range in turnover. Let's calculate 17% of that, and you have a gross profit of $1.36 billion. Now, I'm not kicking Airbnb for being a profitable business. Quite the contrary, they created a business that satisfied a demand, and I have to give respect where respect is due, so congrats to Airbnb. Other issues that need mentioning on top of the fee structure, we also have the problem of payment processing. Depending on the country you live in and the form of payment you take, it can take days to process and for you to receive your payment. Among other issues, as mentioned earlier, and from my own personal experience, there are some high fines to be paid in the advent of cancellations, and this is inevitable in this space, but once again, I find the fine structure to be too high in this case. At some point, there comes a time when competition comes along and points out a glaring discrepancy with a business that has market share, and the tides start to turn. A new model rises up that provides better opportunities and more benefits for the community that is essentially running the sales. So here are the key issues that I think need solving for Airbnb. The high fees need to be reduced. Regulatory issues adding to expenses. A single entity with centralized control. Payment processing speeds often takes days. Reducing fines and correctly processing cancellations. On top of solving these issues, what advantages can be gained by utilizing the blockchain and Web3 for a decentralized protocol instead of the current model? So how will DeFi solve these issues? The first and major issue to solve is the fee structure, and how do we lower those fees? With a decentralized focus on the use of Web3, this should not really be a hard issue to solve. The current fee per transaction on Airbnb is 17%, but I believe a DeFi dApp could get this as low as 2% per transaction, and this should still be enough to cover any kind of operational costs, as this is no longer a centralized entity looking for profit, as profits and benefits will now be passed on to the homeowners and the people renting. The decentralized version would now simply use smart contracts to handle these transactions between homeowners and renters instead of a centralized business. Here is an example of the Airbnb business model and the decentralized version that I propose with an example of a $400 transaction. If we take the figures for 2022 for Airbnb, then they made a gross profit of $1.36 billion based on the fee structure of 17%. Now the DeFi version takes 2% transaction fee for the same transaction. The total gross profit for this model would be $160 million. This honestly feels like it would be sufficient to handle operations and potential regulatory issues. More on that later. Perhaps now with these savings, homeowners will not need to have an extra cleaning fee due to the savings on the fees from the transactions. For the most part, using smart contracts could be 100% decentralized. Obviously, a decentralized protocol will need to have seed investors, founders, developers, and certain teams in place with a need for some kind of support system. But the smart contracts themselves could very easily be developed so there is no third party or middleman controlling and making decisions that negatively impact homeowners and customers. On top of this, a DAO, decentralized autonomous organization, could be implemented that gives control to the protocol investors, homeowners, and customers to participate in the decision-making process, making the protocol truly decentralized via a voting system decided by, for example, native token holders provided by the protocol as incentives. Instant payments. There are many options to withdraw payments from Airbnb, and depending on the country you live in, these can be processed reasonably quickly. However, in some cases, in countries around the world, there can be few options and can take a number of days to process. This may not be inherently an Airbnb issue, but down to local laws and regulations and bank processes. My previous experience with Airbnb would normally see the payment processed once the guest checks into your accommodation and available for withdrawal. This can still remain the same with the Web3 app that uses smart contracts, but as per use of the blockchain, these payments, once released, are literally processed instantaneously within seconds without use of any intermediary, bank, or centralized company. Dealing with cancellations and fines. Also, something I've experienced with is receiving an exorbitant fine for having to cancel a booking which I never even approved in the first place. I ended up removing my property from Airbnb after that and haven't listed it again since. Anyway, that is a story for another day. My point being, there will always be cancellations from both sides, but there needs to be a much better solution to handle potential punishments for homeowners that cancel bookings for guests at the last minute, and a fair distribution of refunds for those guests that also cancel at the last minute. In the case of homeowners cancelling bookings, then there are a few options to throw out there that could be a better way to handle the situation. Firstly, the payment being held back for the booking is refunded back to the customer. 99% refund for the customer and 1% transaction goes to the protocol. However, homeowners could be punished for consistent issues with cancellations, losing ratings each time, less visibility in the marketplace, not being recommended. There are certainly other ways to punish bad actors if they are consistently cancelling reservations instead of overzealous monetary fines that only benefit a centralized business. In the case of a customer or renter cancelling a reservation, Depending on the time frame and how close it is to the booking date, then a tiered refund structure could be in place that reduces the refund the closer it is cancelled to the booking date. The refund is then split between the inconvenienced homeowner and the customer, cancelling the booking, with a larger percentage going to the homeowner the closer it is to the booking date. As far as I know, Airbnb do not pass on any refunds to the homeowners, but do correct me if I'm wrong. Here is an example of what a refund split might look like. Cancellation 2 weeks or more, a refund of 90% goes to the customer, 10% goes to the homeowner. A cancellation 1 week or more, the refund of 80% goes to the customer and 20% goes to the homeowner. 6 days out, it's 70-30, 5 days, 60-40, 4, 50-50, 3, 40-60, 2 days out, 30-70, and 1 day, 20-80. So that's kind of split that I think would be a lot fairer between participants. Note that each transaction also incurs a 1% transaction fee going to the protocol. So what about regulations? Do we move regulatory issues to the homeowner? Now, if we have a decentralized protocol, is it possible to operate across borders in the rental space and avoid many of the regulatory hurdles? That is obviously not a question I can answer personally, but I believe requires careful consideration. One potential avenue that may be a solution moving forward is to put the regulatory issues back on the homeowners in their local jurisdiction. Perhaps to operate as a short-term holiday rental property, this may be best handled with local laws and permissions from local governments by the homeowner. So all potential issues are handled locally and permissions can be revoked to operate as a short-term rental property at any time. In the advent of issues from guests disturbing the peace or creating problems with neighbouring dwellings, then the local law officials can potentially fine homeowners or cancel any permits. So if you're a homeowner and want to participate in the short-term holiday rental market, then it is on you to make sure you meet all the regulatory standards outlined by your local government and not the DeFi protocol. This does not exclude obvious tax and income laws that would need to be satisfied. Again, this is just me throwing suggestions out there, so don't take me literally as I'm just throwing out potential ideas as food for thought. For tax purposes, you could simply create a smart contract for each individual region or country that handles transactions for businesses within that sector to satisfy the need for detailed reporting based solely on that region. Using blockchain tech and Web3 opens up the doors for a lot of other opportunities to expand on this model for further revenue potential for our investors or the protocol itself. Native token. There are many kinds of incentives that can be produced with the use of a native token for the protocol. This token can be used for governing the protocol by token holders, staking the token for yield opportunities, using the token with the protocol booking system itself, reward and discount incentives for homeowners and renters. These are just a few of the many potential opportunities a native token might be useful within such a protocol. The introduction of a native token within the protocol serves as a catalyst for incentivizing engagement, fostering governance, and enabling multifaceted utility. This token-based governance empowers stakeholders, allowing them to actively participate in decision-making, stake tokens for rewards, and seamlessly interact within the ecosystem. There is a potential for the protocol to also own real estate properties, be it via homeowners potentially selling their real estate via the platform, or buying short-term holiday rentals in strategic tourist locations. Protocol-owned real estate could also be available for bookings on the platform to generate extra revenue, allowing the protocol to earn further liquidity and provide additional earnings benefits passed on to investors and customers in the form of things like DeFi yield farming or even increased liquidity in the native token via things like buybacks, increasing the overall market cap backed by real-world assets. Moreover, the potential for the protocol to own real estate assets and facilitate fractionalized investing revolutionizes the accessibility of luxury holiday villas. Let's touch base further on that fractionalized investing, with an opportunity existing to open up a real estate investment of protocol-owned properties in the form of fractionalized investing, allowing people to make small investments into real estate, lowering the threshold for investing in luxury holiday villas for the middle-class sectors, and providing a rental revenue share model passed on to all investors in each property. So essentially, real estate investors would make returns on equity gains over time, as well as rental revenue. Here is an example of how this might work utilizing smart contract technology. Now, along with fractionalized investing, naturally, NFT technology is also another opportunity to implement within the protocol. With NFT technology, it is almost a given to integrate into Web3 protocol of this nature. The integration of NFT technology amplifies engagement and efficiency within the protocol. NFTs incentivize stakeholders, streamline processes, and facilitate instantaneous transactions, transforming the traditional real estate market's cumbersome procedures. There are many opportunities that open themselves up for the use of NFT technology that would complement the protocol and could be used in many ways. Here are a list of examples. In the booking process, when booking holiday rentals, NFTs could be used to incentivize homeowners or customers in multiple ways. Earn NFTs as badges for each booking that can be staked for native token rewards or used as incentives or discounts for future bookings. NFTs for fractionalized investing in the protocol-owned real estate. Provided to investors, an NFT would represent the value in equity and rental revenue share they have invested in the real estate property. Automatically earning rental revenue passed on to their wallets via smart contract interaction with the attributes of the NFT. NFTs representing investments into real estate can be bought and sold within seconds, as opposed to hurdles that would normally exist in traditional markets with selling shares in real estate properties. To cap it off, we have decentralized autonomous organizations. There is a major potential for such a DeFi protocol that runs on smart contracts to be close to 100% decentralized. And with the implementation of a DAO allowing investors, customers, token holders to be in control of the decision-making adds another level of decentralization to the mix. The decision-making process is handed over to the community for voting on, and the weight of individual votes can be measured in the size of one's investment in the protocol, making it a fair process for those with larger investments having more weight in the decision-making process. This can also be implemented with NFT technology for investors in fractionalized real estate properties, allowing NFT holders to vote on vital decisions to make on properties. For example, whether to sell a property for equity gains, upgrade, or spend revenue on maintenance, etc., etc. There are many opportunities for a DAO system. So in my opinion, the integration of blockchain technology, Web3 protocols, and DeFi principles within the realm of property and rentals and real estate investment presents a transformative paradigm shift, challenging the traditional models exemplified by platforms like Airbnb. The manifold advantages stemming from these advancements pave the way for an ecosystem rich in opportunities, democratized access, enhanced governance, and innovative investment structures. In essence, these advancements signify not merely an evolution, but a revolution in the dynamics of property rentals and real estate investments. They pave the way for a broader participation, community-driven decision-making, and an innovative landscape that redefines the norms of property rentals and investments in the digital age, making for a fairer model of returns for all participants. Thank you for sticking around this long and getting to the end of my very first episode of A DeFi Solution, episode 1. Let me know in the comments below your thoughts and what sector I should next cover when it comes to DeFi providing solutions for traditional business models. Don't forget to like and subscribe, hit that notification bell, as these videos are usually always time sensitive. All right guys, thanks for sticking around. I'll talk to you in the next one. See you next time. Bye for now.